Welcome back to Bunnex Investment Group. In this video, we're going to talk about mastering the shark fin to M&W reversal strategy, one of the easiest yet powerful trading strategies. Be sure to sit back and have somewhere to take some notes. In this video, I'm going to show you a powerful forex strategy that starts with a hidden signal most traders ignore. We want to go into the intrinsic details which a lot of traders does not look at when they are trading. We will use it on the higher time frame to spot the potential reversals before they are obvious, then drop down to the lower time frames for patterns and enter using powerful confirmation system that I'll provide you within this video. If you're looking for trades with tight stops and high reward to risk ratio, this is it. So you need to actually pay close attention to everything that I'm going to talk about. Firstly, we are going to define the tools that you are going to require. For this strategy, we are going to use the TDI and basic price action. The TDI standing for the Traders Dynamic Index, which I can provide you for free. You just need to contact me in the Telegram channel that I'll leave in the description box below. The TDI is to give us market sentiment, as it is an indicator that measures market sentiment as well as market volatility at the same time. So we are going to require market sentiment of the higher time frame so that the lower time frame will provide us entry patterns by presenting price action that I'll show you shortly. So basically, what are we going to use the TDI for? We are going to use it to get what we call the TDI shark fin. So this is a common term to those who follow this channel or those who have been subscribers of this channel since 2019. It's a specific behavior of the relative strength index, or RSI in short, or RSI line on the TDI. So we are saying the TDI is basically focused on the RSI line since the TDI has the relative strength line. So it's when the RSI suddenly spikes outside the volatility bands, usually above 68 or 32, and then sharply turns back, right? So we are saying these volatility bands, which I'll show you in the next slide, when the RSI line goes outside of those bands and sharply gets back, that is what we call the TDI shark fin. It just looks like a fin cutting through the water. That is where it got its nickname from. So this signal shows that the market is overextended, often manipulated, and ready for a trap or reversal, as shown below. All right, so here we can see an example of a snippet from the TDI where this green line is the RSI line. So whenever the RSI line goes outside these blue bands, that is when we refer to as the shark fin. So this is a shark fin and this is also a shark fin, right? So basically these are the lines that are necessary for this particular strategy when we are talking of the TDI shark fin. So why shark fins are powerful on H4 time frame? Basically explaining which time frame we are going to be looking for shark fin. So on the H4 time frame, the RSI line fin usually happens after a long trend. Usually the market would have come from a very long trend to the downside or to the upside like this. It's the market maker's bait. So a long sustained trend is good for traders, but the market makers are also wise to use it to bait traders. Why? Because most traders will chase the move thinking the trend will continue. They will be actually saying the market is still trending to the downside like that. But when we are using the shark fin, we know exactly where the market can actually reverse. So when the RSI bends back towards the channel, it signals that price is about to snap back. So usually at this particular time, we'll see EMAs fanned out. And within that fan out, you usually see that particular RSI line bending back towards the channel. So this particular scenario is your milestone. When you see a TDI on H4 time frame, it's your milestone. So after having or getting to that milestone, we now switch to the H1 time frame, and on the H1 time frame, this is what we are now looking for. So the shark fin on H4 tells us the market is stretched, but it doesn't tell us when and where to enter the market. That is why we now drop to the H1 time frame to see how the trap is being set. On H1, the market usually builds a multi-session MOW formation. So this is where the market maker creates confusion, baiting retail traders into false breakouts before reversing, right? So in that particular instance, we are saying on the H4, we have a shark fin that has been seen like this. Then on the H1 time frame, within that particular point, we will expect to see a W pattern, which is also another baiting move, right? So this is how it looks like. Dropping to H1 to look for a multi-session. This is H4 time frame, where we would see the relative strength index piercing outside the bands, and then this is the H1. So here corresponds to this particular view of price action on the H1. We can see that on the H4 time frame, the market would have gone outside the bands, and then on the H1 time frame would have created this particular multi-session W. In this particular case, we might call it a triple bottom, but it's basically another form of a W pattern, right? So understanding the multi-session M or W pattern is necessary. An M forms when price makes high, a high pulls back, then makes false second high, usually with a stop hand wick, and then drops. So what we are saying here is usually the market will create what we call a page, which is basically a trap above the first leg level like this. So a W is the same in reverse, a low, a pullback, and then lower low, then with a spike, then reverse. These are not random shapes. They are actually done with an intent to induce hit stops, confuse, and so forth. So they are intended traps formed across 2 or 3 sessions, London, New York, and sometimes Asia. All right, so basically the W pattern will actually look like this. First leg, and you can see this is the first leg level, which actually was created, and this is coming from a shark fin on the H4 time frame, and we can see the market shot right straight to the upside. So timing also matters, and sessions are the key. A true MOW takes time to build. If you see both legs of the pattern inside one session, it's likely a fake, right? I've seen a lot of traders seeing a pattern in one session, or say in London or in US. Usually that trade will be a loser, because timing, true M and W's take time to form. But if the first leg forms in London and the second in New York, that's when you know the setup is real. Always remember that patience pays. So basically the strategy states H4 shark fin, that is RSI overshoot, which you call to market strength, then drop to the H1 and look for a multi-session MOW, wait for candlestick reversal pattern at the second leg of the multi-session MOW, enter with stop below the second leg and target logical exits. Let's now have market examples. But before we dive into examples, I want to personally invite you to my one-on-one mentorship program. If you are serious about turning your trading into a powerful and sustainable source of income, this is for you. Use the link that I've left in the description box below. I only take few students on a first-come, first-served basis. All right, so I have already marked the TDI shark fins on the H4 time frame. This is USD CHF, and these are the shark fins and the corresponding points on the price action side. You can see a TDI high, a shark fin to the upside, and then that presentation on the price action like this. So let's now switch to the H1 time frame to see how it actually looks like. We can see first leg in the London, second leg in the US. The market went to the downside over a long period of time. Here it was not a good pattern because there were 2 legs within the same session, so this was a skip. Right, this was a very beautiful pattern which had first leg on this day, which is the Asian session of this particular day, and the second leg in the US session of the following day, actually giving us this long sustained run to the upside. Then we had another beautiful pattern, first leg here, and then we had the second leg here, and another beautiful pattern. And then here we had a triple bottom on the downside, and the market went to the upside basically like that. So that is how you will be actually scouting for entries, and doing so over a long period of time or consistently will actually allow you to see a return on investment on your capital. On that note, we've come to the end of our today's video. Thank you for watching. Like and subscribe, and I'll see you on the free Telegram channel, which I've left in the description box below.